Hello everyone. Today, let's talk about something that affects all of us, taxes. Specifically, we're going to break down the 2024 tax brackets. And understanding this can really help you plan your finances better and can actually save you money. Yes, you heard that right. It's not just about knowing how much you owe, but also about strategizing your finances in a way that can benefit you in the long run. So, let's get started. In 2024, our tax system remains a progressive one. This means that the more you earn, the higher the tax rate you'll pay on your income. But it's not as simple as it sounds. There's more to it than just paying a flat percentage of your income. So then, let's debunk a common myth. Being in a higher tax bracket does not mean all your income is taxed at that higher rate. This misconception is widespread, and it can make the whole tax system seem more daunting than it actually is. So, how do tax brackets actually work? They are essentially slices of your income taxed at increasing rates, which means only the money you earn within a certain bracket is taxed at that bracket's rate. It's like layers in a cake. Each layer has its own flavor, or in this case, its own tax rate. So, let's use an example to help explain this. Let's say you recently graduated college and you're a single person making $70,000 a year. According to the 2024 tax brackets, you may think you fall into the 22% bracket. But hold on, does this mean you're giving 22% of your entire income to the government? Absolutely not. This is where many people get confused. First off, you need to consider your deductions, which reduce your taxable income. For example, after applying the standard deduction of $14,600, your taxable income comes down to $55,400. Now, here's how the 2024 tax brackets come into play. We have several marginal tax brackets, and each one applies only to a portion of your income. The first $11,600 of your income is taxed at the lowest rate of 10%. Next, the income over $11,600 and up to $47,150 is taxed at 12%. And finally, your remaining income, which is the amount over $47,150, falls into the 22% bracket. But here's the key point. Even though your highest tax rate is 22%, your effective tax rate, the average rate you pay on your entire income, is actually much lower. It's a blend of the different rates from each bracket your income passes through. So now, in comparison, let's consider someone at the higher end of the income spectrum. In 2024, if you're a single filer earning over $609,350, you're in the top tax bracket of 37%. But remember, only the income above $609,350 is taxed at 37%. The rest of your income is taxed at the lower rates of the preceding brackets: 35%, 32%, 24%, 22%, 12%, and 10%. This progressive system ensures that you only pay higher rates on the portions of your income that actually fall into those higher brackets. It's designed to be fair and proportional to your ability to pay. So, why does this matter to you? Well, understanding how these brackets work can really help when you're making financial decisions, like how much to contribute to a retirement plan or whether to take on extra work. It also busts the myth that earning more can somehow put you in a worse financial position because of higher taxes. That's just not the case. Remember, your effective tax rate is a more accurate reflection of your tax burden than your top marginal rate. For instance, if you're in the 22% tax bracket, you're not actually paying 22% on all your income. Instead, you're paying a blended rate that's lower based on how your income is spread across the various brackets. In 2024, the brackets are set so that as your income increases, you gradually move into higher tax brackets. But it's only the income that falls within each bracket that gets taxed at that bracket's rate. This system is designed to be more equitable, ensuring those with higher incomes contribute a fair share without overburdening those with lower incomes. Now that we've looked at how the 2024 tax brackets work, let's pause for a moment to clarify something important. These brackets are specifically for the income you earn in the year 2024. This is a key point to remember, as it's common to think about tax brackets in the context of when you file your taxes, which would be in 2025 for the year 2024. However, it's the money you earn during 2024 that falls into these brackets. Keeping this in mind is crucial for accurate financial planning and understanding how changes in tax brackets from year to year can impact your finances. So there you have it, a look at the 2024 tax brackets and how they work. The key takeaway is that understanding your tax brackets can help you better plan your financial future. It helps you see the bigger picture and make smarter decisions about your money. Taxes might seem complex, but with a little bit of knowledge, you can navigate them like a pro.